the world is full of problems. So, for example, if you want to deploy, large number of jobs, you cannot deploy it in government, you cannot deploy it in enterprise, because those are sort of steady, sort of growth stuff. You can only deploy it by hyperscale ventures. We see a lot of founders around here. They did not get along with the investors, and we see investors who are not really good to the founders. It's a relation which has its own pros and cons. If it's not really good, it's better to keep away of that engagement till you're comfortable. It's good enough for work. So here, basically, you could look at founder to market fit, because in other ecosystem you see founder, you say, okay, we've exited, we are 3x founder, 3x exit, we are what. So founder to market fit is one of the main important element that we look at. And most of the investors here, or the mentality of the investors in Middle East, it's still real estate investors mentality. It's an asset-based investor mentality. Everything is seen and felt. When it's come to technology, there's a lot of challenges.
So today we brought you a seasoned early stage venture capitalist from the UAE to discuss the trends and insights on venture capital in the Middle East from an early stage focused VC POV perspective. Let's have a quick look to today's agenda. So basically, quick introductions about the organizers, and then we will dive into the discussion. And at the end, we're going to have a networking session with the Zoom breakouts. With that being said, I would love to welcome here Walied to introduce himself. And right after that, we're going to dive into the discussion. All right, Walied, stage is yours.
Great. Thanks a lot. Thanks, Rick, and everybody in the audience today. And I think my story comes back to a 30 years back in history, where I was graduating from college in India, and I got a colleague of mine who one day in the afternoon tea session together, he told me, Waleed, there's something called the internet. You have to check it out. So imagine just having tea with somebody, and he's like, there's something called the internet you have to check out. And then at that time, we did not know what is internet is. And I started to ask maybe a silly question today. It's like, what is it, and how do we use it, and how do you make benefit out of it? And then next day, he told me where is it. It was in a research center in university, and I went there. I spent like almost half of my monthly, expenses in half an hour. That time there was no. It was 1995. There was no. There was no Google. There was no Yahoo. There was nothing. It was like Ask Jeeves and Alta Vista and stuff. Probably most of the people around today, they wouldn't have known about it. And then I felt in love with it, but it was like really, it was really expensive. You cannot use it a lot. So we started having deals with internet cafes by that time, that we get you some people, we will help you out, but when there is an empty, BC, then we can use it. And then we start learning, occasionally about that. One of the people I learned a lot from the internet, about the internet, he was an orphan who didn't have a home. He used to sleep in an internet cafe and clean the space, but because he was there, he learned a lot. And then down the line, back to Dubai, end of 1990s, and work in e-government, work with a couple of high-profile, entities by that time. Had an ability to launch several ventures over the last 20 years, about 60 startups. These are the one which are real companies, and then a lot of failed projects, more than 60 or 70. But I think till 2009, there was not much of an ecosystem around that. Out of my whole experience, I believe that founders in the region here, they need to be supported. It's still an emerging region with a lot of young people around and stuff like that. That's led me to work in CVC in 2011, 2012, one of the earliest CVC supported by DB World. And then from 2012, I get a lot of connections with East and North Europe ecosystems. In where we brought up a couple of technical ventures, and they landed and expanded in the region here. We got them at Bartinas without equity. By 2018, we established a venture firm in Estonia, in which we start to co-create with some of the entities and bring them around. And we formally established the venture fund in 2022, based in Delaware. And it's this is like a nutshell sort of stuff. But again, there's a lot of details in the middle, you know.
Amazing. Thank you so much for sharing that. It's a great story. You know,
Yeah.
for, you know, for, a fun fact about me, my first computer was Windows 998.
Yeah, I mean, like when Windows 95 came and it was colored, it was really nice because we were in DOS and Fox Pro and basically, sort of, dual color sort of screens, you know. When we see the full colors, it was really a very
Oh,
interesting moment.
oh my God. Wow. Such a great story. Thank you so much for sharing that. Really appreciate it. So,
Welcome.
Waleed, I have some preset questions for you to articulate and then really understand the state of venture capital in the Middle East. I know it's kind of broad, Middle East is pretty big, it's a very multicultural area with, a lot of jurisdictions, a lot of countries, a lot of issues at the same time. But definitely promising, and the startup ecosystem is literally booming there and very interesting. So I'd like to talk about you on that. So again, today panel discussion, I'm focusing on the expanding role of the venture capital in the fostering success of the early stage ventures in the Middle East focus this time. So every week we change the topic and then change our direction in a different place. So a quick intro for setting up the tone. So, VC is not merely about the providing of funding, right? So it's a catalyst for innovation and growth. So pivot playing a pivotal role for shaping the industries and unlocking new opportunities in the region and beyond. And those opportunities for literally everything, changing our lives, but at the same time, creating jobs and making the life better overall and solving some of the world's most challenging issues in the world that normally normal industry wouldn't be able to solve. But venture capital is really able to back the crazy ones and the people who's really innovative. So we will be delving into in this how investors select the startups to support, two key factors to prioritize, and unique challenges, opportunities in the Middle East and the Middle East rapid evolving markets. And our aim is today is explore how startups, investors, and ecosystem partners can collaborate effectively with the build and thrive in businesses and drive sustainable long-term growth in the region and in its global impact as well. So, quick disclaimer. Yeah, this is completely an information purpose only event. It's not for offering endorsement in investments. Please consult any professionals or any advice for if you're looking for investment. So the opinions are shared here are own and impersonal. So again, thank you so much for joining everyone. Let's dive into the questions. All right. Um, I'd like to start by I craft my questions around the four stages to be really elaborate the venture in the Middle East. So the first one is mostly about understanding first to this, and also introducing to our audience. So I'd like to start by examining how venture capital funding supports startups in scaling and contributing to the regional innovation, especially for those who could not, who could potentially interested in partnering with the Middle East, Middle Eastern startup ecosystem and venture ecosystem. So my first question is, could you give us like a brief introduction overview of VC in the Middle East?
Yeah, I think if we go back to the early days, most of the significant events that happen I think one of the major significant event happened in 2009. That time I was an advisor for a group that owns a capital club in Dubai. And then we had one session that was done by, I think, Mr. Qureshi. He was hosting Sameh Togan over the acquisition of Yahoo to Maktub. So again, Maktub, it was a community around here based on forums. You know, the days of the forum before the social media, and then that time, I think 2009, there was an announcement that Yahoo acquired Maktub for, I think, 190 plus $1 million. By that time, the figure was big. You know, technical acquisition. Still, there's no ecosystem. Mostly in GCC, most of the ecosystem was emerging from the Levant area, and but particularly supported by a lot of entrepreneurs from that area, like Fadi Ghandour, who's the founder of Aramix, and then Sami Togan, who's the founder of Jabbar Group, which tend to be like a sort of venture builder or innovation house, which brought up a lot of exit uh, startups by that time. But that was an eye opener, I think, for everybody. By that time, how technology companies can really reach a very high valuation. Before that, there was an individual, practices. I mean, it's on your own. There's no incubators, there's no accelerators, there's no VC funding. You try to do something, you take full responsibility about it. The failure rate was also huge, and there's nothing like startup. You just on your own. So this is, I think, the starting moment, and then by 2011, 2012, I remember we had something called Dubai Tech Night in 2011, 2012, in which every 2 weeks we gather and then people pitch ideas. We used to gather in Astoria Hall in Dubai Internet City. They've been kind to give it us for free. And then after that, we started to listen to ideas, just like forming a community and stuff like that, and then some technical sessions and stuff. By by 2012, we see startup weekends coming up. Right from I360 Accelerator used to do several startup weekend. I remember first one was in Dubai, I think 2011, then 2012, and then people they started to know, that there's some sort of momentum that's happening. In 2013, there was a CVC established by DB World, which called Ternet. Now that CVC, I had a chance to collaborate with in different levels during that time. And then the main idea, of that CVCs was to scout for the global logistic and supply chain innovation, and to bring them to Dubai and other locations where DB World operate, and then they will stay like for 6 months to try their innovation and potentially, it's like a big, sort of engagement with an initial funding. But again, there's a structure fund along with it. And from there, we see again accelerators, incubators. We see a lot of VC farm. The initial part, like Middle East venture partners, like Big Capital, like several other players who have been playing around in the region. So this is the way I could see here in Dubai. Then we see things has also been happening in Egypt big time. There's Sawari Ventures, there's Ahmed Al Ilfi, there was several others who has been a lot of them. They've been diasporas who has been in US and others, and then coming back to the ecosystem. This is what was happening, and I think by 2014, 2015, things they started to accelerate, and then a lot of outlet they started to come, like the way Silicon Oasis, In5, like Hub 71, Area 2071, Dubai Future Accelerator. They started in terms of Dubai. We see also in Saudi Arabia, they have been Ogal Group, the Angel Group for Ogal. There was Wide from Aramco, which is like also incubator and sort of funding. And yeah, this is what we see here. We see also another fresh sort of ecosystem, like in terms of Tunisia, for example, which has been active for the last 5 years. Morocco, Algeria, who has been also active for the last couple of years. Plus, like Egypt, Turkey has been there for much longer, and Turkey has been, always focusing towards, West, like normally, establishing there, looking at that market. There's some of the entrepreneurs, as you said, like the founder of Udemy, has been able to listen at earlier stage. So this is what this is my viewpoint of the ecosystem. Maybe I'm missing a lot of stuff, but this is what I've been seeing around, on how the ecosystem been developed,
It's great. I don't know. I mentioned to the audience, but I'm Turkish from the name is Turkey. They changed the international name of this. So I've been involved in to the startup ecosystem like since 2005. I was so young that time, but the people. I mean, special shout out to Burak Büyükdemir. I hope he watched this. He has a huge influence on me. So he launched the uh, Etohum, the you might be also kind of accelerator incubator program and do a lot of events there. The first time I get introduced the startup ecosystem to with him, really, he has huge influence on me. He introduced everything about this, I mean, it's kind of fun to mention here. Anyways, I'm really it's really impressive to see that how things evolving, over time. So, let's continue by defining the most in-demand industries, because this is some of the most asked questions out there. In terms of Middle East, I know it's broad, but what makes them? What is the most attractive? What's hot in the Middle East for BC point of view in the Middle East?
Well, I think there's a lot of the whole region hasn't been a technology production region. It has always been a consumption region for technology. So that has given a lot of opportunity for a lot of multinational companies to come here and to serve. But there was always a gap regarding bridging the local need. Understanding more cultural element and stuff like that. And I think with most of the economies in GCC, particularly trying to diversify more on like sort of service-based industry, diversify away from oil-based industry and stuff like that. That was a great chance, for a lot of innovation to be deployed in the region here. And this has been a real good opportunity because again, most of the population are young, they're still looking for a lot of stuff to be done. They're looking for a lot of services. And then again, particularly within the last 5 years, I think after COVID, there was a lot of job loss and a lot of instability happening, which led also to a lot of problems happening. And as Adair said, the chairman of Founders Institute always say is like the world is full of problems. So, for example, if you want to deploy, large number of jobs, you cannot deploy it in government, you cannot deploy it in enterprise, because those are sort of steady, sort of growth stuff. You can only deploy it by hyperscale ventures. And then what we see right now, for example, particularly with ride hailing or food delivery, we see that companies that are scaling from couple of number of employees up to 50,000, 100,000, sometimes, hundreds of thousands of employees like Karim and others, which create a lot of jobs. It is creating a complete different layer in the economy, which are solving a lot of problems. I think this is the most interesting part. And another part is geographic location also, where Middle East is a gateway, towards Africa, towards subcontinent, Central Asia, and even, so it's like normally you can reach about 4 billion people with a 4 hour drive, or 5 hour drive from here. So those are all factors that contribute to the what's happening today, the level of activities we see, and we see the way it's progressing. I think we are getting another model like Silicon Valley that's happening in GCC here. So we see the economy is moving more east rather than west, and then it's moving to more younger nations rather than more settled, more senior nations, which has have a very limited room for growth.
That's great. It's really exciting, and also great overview. Thank you so much for sharing that. I'd like to maybe tap into it depends on the region every time, the venture capitalist perspective can be changed, right? Because that's why the um cross-border investments, cross-border ecosystem is pretty challenging, but it's um always worth to talk about. So I'd like to a bit tap into the VC, how VCs evaluate and identify investment opportunities in the Middle East. So what key factors do VCs look for when choosing the which startups to invest in the Middle East? I know it's quite international there. So is there any specific criteria that you guys are also looking for from the Middle East angle?
Well, I think one of the most local criteria that we look at, and this due to the emerging nature of the ecosystem here. I mean, you do not have a lot of exited founders, You do not have a lot of experienced founders who have been, running ventures one and venture two and stuff like that, like other ecosystems. So here, basically, you could look at founder to market fit because in other ecosystem, you see founders, you say, okay, we've exited, we are 3x founder, 3x exit, we are one. You don't see this here because even the exits in the region, they're just counted in your on your own fingers. So founder to market fit is one of the main important element that we look at. We look at the team, the synergy of the team. We look at basically the mindset because again, there's a lot of misconception about entrepreneurship here because of the sort of media exposure and with the sort of stuff. Many people they feel like it's an always sort of nice show happening there. I think many of the entrepreneurs need to understand the level of commitment that they need to make in order to make this venture successful over 5 years, 7 years, 8 years, sometimes 10 years. And then again, also the sort of resilienceness of the idea against any disruptive factor over that. So always when we look at founders, we ask them a question: do you think you're going to be excited about this 5 years from now or 7 years from now with the same level of excitement? We see right now a lot of disruptive technologies like AI, like quantum, which is coming with a whole level of innovation. We see innovation in sort of life science, material science. We see innovation in space. So again, most of the founders they need to think, and we need to confirm that they are thinking between 5 to 10 years down the line, which is normally the time where the funds started to divest and normally started creating gains for their portfolio. So these are the main points I think which we look at when we evaluate like startups.
That's great. So, moving forward, maybe we can also tap into how the Middle East connects to the rest of the world. So this is going to be the next chapter of my questions actually. So how is the global connectivity and collaboration between other startup ecosystems across the world? Because I'm talking from a Japan standpoint, but I'm also as a nationality, I'm Turkish. I know how international things going on right now across the world. There's a growing interest from here. So how is this going on there generally?
Yeah, I think speaking from Dubai now, where we have almost 200 nationalities over here, this is a very diversified example on how many different people, different culture you can get in one place, and this is also a part of success platform in which, for example, if you launch here, if you manage to do product to market fit for 200 nationalities, then your potential to scale globally, it's high because probably you have come through the barrier of a lot of cultural constraints, a lot of different, perception, different understanding of your product or service and all. But again, in my opinion, it's not like very simply, just put in one place and scale globally. We see a lot of counter globalization sort of, approaches that are happening. And this might lead to, a bit sort of uh, putting your own things, rather than collaborating at global level. I think right now, having corridors, and this is what we see mostly, putting corridors, let's see, between Middle East and Japan, between Middle East and North Europe, between Middle East and Africa, between Middle East and Central Asia. These are all very interesting sort of bilateral engagement, or even it could be trilateral engagement, because many of the companies we see today, they could land in Dubai or Riyadh or Cairo, and after they solve for the local audience, they expand to neighboring countries based on geographies, based on similarities in culture and stuff like that. So again, we see a lot of successful factors with land and expand, especially as I mentioned earlier, the geographic location, of Middle East tapping into Central Asia, tapping into Indian subcontinents, tapping into East Europe and Africa here, which is almost a market of around 2 billion people together. So I think there's a pros and cons as we see it today. But I believe that even if the umbrella of globalization is being challenged down the line, working on corridors, working on business councils. I'm a part of U Estonia Business Council. I'm part of UA Finland Business Council. I've been operating in Nordic and Baltic for almost 15 years in that ecosystem. I think that also can bring exchange of innovation. For example, startup will come here to sort of seek investment and market access to a wider audience, because those countries are having a bit of low population. And on the other side, for example, startups from here can seek to go north or east to seek more innovation in terms of more maturity of deep tech, material science and other experiences that they can tap in order to enhance their product and service.
It's amazing, especially the part that you talk about it can be a really great market for testing the product market fit. Perhaps you can get a product market fit from there. Because from my perspective, it was really challenging from Japan, trying from Japan. Because I mean, we need to work so hard, and we set up like 20 different countries as a target market, but everything was like hardcore, outreach, and it was so challenging. It's best to have, in your town, you go and talk with people and get some insight. That would be amazing. So it's actually quite charming, especially in, I mean, UAE and all the surrounding countries, we have an access there. So it's amazing place to.
Yeah, I
So
mean, one of the main challenges is startup phase, and also I consider it one of the failures reason, is premature scaling, So normally you tap into a specific market without having a significant market share in that market, then you go into another one and stuff like that. And sometime in order to test the product, you want to test in on different market segment. But a place like Dubai, for example, or Abu Dhabi, or even Riyadh right now, they are having that much of diversity that you do not have to leave home, and you
mm,
still have a very diversified sort of persona that you could test the product and service on them.
I see. I think Japan has a lot of things to learn from UAE or overall Middle East, I believe. A lot of things to learn. I mean, I know that we have some Japan audience here as well. Thanks for joining this time. It's pretty late for them, but anyway. So let's move forward. I will, because it's a great topic. Most of my VC friends are also asking this. There's a huge demand on cross-border deals, and it's extremely challenging to do. But you're actually a master of that. I know you have uh, several deals internationally, because the nature of the Middle East is extremely international. So could you explain a little bit more in detail how VCs and startups and ecosystem partners can collaborate more effectively in the Middle East, and vice versa, the other way around, from Middle East to the world, and the world to the Middle East. How could they can partner? What are the overarching strategies and best practice out there?
I think we've been lucky enough to be around here in during an interesting time where we learned a lot, about we see here the establishment of the Dubai International Financial Center, Abu Dhabi Global Market, and other entities there, in the region here. But I think most of the people agree that the only way for creating jobs is by investing in hyper growth ventures. And normally those hyper growth ventures, they are related to technology at this point. Now, on the other side, we see even the real estate type of investors or the family offices here, they started to be more, interested into technology investment. And this is basically because they have seen venture that has been around for 7 years, for 10 years, that has exited in a couple of $1 billion valuation. While most of these family offices, they have been in business for 70, some of them 100 years, and now they have created, similar wealth. So for them, again, also you see the second and third generation of those family offices, they are more tech savvy. Some of them, they are tech native, and they would like to try something new. So here we see also a lot of interest to bring technologies from outside, because normally those family offices, they are in mobility, they're in manufacturing, they're in logistic, they're in warehouses, real estate. So they have their own challenges, within their network. So the initial approach was to get partners, to serve you or to solve your problem, provide software for you, provide service for you, and stuff like that, as vendors. Or maybe you can double down and invest into startups who can source for you and for other markets as well. So we see the interest in innovation, basically, and capacity building, that motivate a lot of movement like this. A lot of movement like this. We've got the opportunity to introduce about 4 ventures over the last 15 years from North Europe, who have a significant market share today, right from India till Morocco. So here, they've started solving problems that are normally beyond the capacity of the region, whether technically or whether based on experience, or whether, for example, in public transport and others, the maturity of the industry itself, it's been more mature in other parts of the world. So eventually, their ability to address challenges is more. So this is in terms of inbound sort of movement. In terms of outbound sort of movement, they've always been interested to invest into big player, whether in US and others, because most of those family office high net worth individual, they have a diversification strategy, but the main challenge was to have access to the deal flows over there. So if you want to invest in a Snapchat or Instagram before the acquisition and others, normally you don't get the deal flow. So their tendency to invest in funds that get the deal flow for those stuff, for those ventures, it was more reasonable, rather than to go and scout for every venture by itself.
Very interesting. Again, there are many things that we can learn from the region. Um, so okay, how about the future? Let's talk about a little bit about the future of the Middle East. But I think our conversation should also cover a little bit the challenges. It's not always about the bright and things, right? So if we can really aware of the challenges, we can position ourselves, right? So and then we can also connect to the future of the venture capital in the Middle East. So shall we highlight some obstacles that investors face, both maybe investors and startups also face in both side of the table?
I think one of the main challenges that facing the region here is talent.
Mm.
Since most of the countries in the region they do not have that much of population, and then here most of the talent are expertise talent. If you talk about GCC, working on technology, because the ambition and the plan is big, but again it requires a continuous flow of talent, and this has been a challenge because most of the talent that are coming from several parts of the world, they used to come here for like 5 years, for 10 years. When they get some financial sound, they normally move to Europe or to US. And we see right now there's a lot of localization programs like long-term visas, yeah, like a lot of sort of support program because the tax, sort of advantage nature, which is getting talent more sticking to the region, but it's still with a vision to produce technology over here. Still, there's a continuous requirement of talent. This is one of the main thing. I think the second thing also the culture of entrepreneurship itself. Most of the people in the region here, they are mostly on a gentleman agreement sort of stuff. So we see a lot of founders that they have established ventures, and they have been also they even creating revenue, and still they don't have a founder agreement. They don't have a vesting agreement. They do not have a proper hold cost structure. They don't know where the IB is being assigned to. And normally, when those ventures pass the very early stage, like angel or pre-seed, when they go to equity sort of investment, then issues is starting to arise. Whether some of the founders are not performing well, they do not have a vesting agreement, or they don't have agreement at all. Some of them they don't have bookkeeping and corporate governance from day one. So again, those are challenges that we see always on daily basis. Yeah.
See, so I think it's time to talk about the future. So we learned all the challenges and then how we can navigate them. So, and also one of the questions on the audience is related about the future as well. So I will be able to cover this too. Meanwhile, the audience, please, you can ask your questions. You can drop here. You can use the notes, the chat section as a running note. You can just feel free to drop everything you want. Okay, that's great. You can engage with us. At the last quarter of our discussion, we will be mostly, getting your questions and answering. So far, we have like around 6 questions. So I'm going to be covering right now with this one, which is what is your point of view on the VC, the shaping the future of the Middle East economy? How is the future looks like for the VC and then overall venture ecosystem?
Yeah, I think the next couple of decades are going to be promising. We see a lot of democratization of venture capital, out of the valley, with the whole cultural changes of work from anywhere and stuff like that. So again, many of the top VCs in the valley, they are no longer having a headquarter, and the previous structure, they are just going globally, hybrid or virtual. You see Founder Institute, how they operate in 250 chapters. all over the world, or maybe more, in a more hybrid manner. We see people are using, Slack and more collaborative tools that rather than email and offices and stuff like that. So I think sticking to a place is no longer going to be the value. It's all about creating the community where people can work together, whether they are founder, the ecosystem builders, the regulator, and the investors as well. In terms of the strategy, for most of the countries in the region here, we see these strategies like 20 years, 30 years. Even in UAE, we have 271 strategy, which is spreading up to 271. These strategies involve industry 4, AI strategies, industry, digital economy sort of strategy, and stuff like that. So always, if you align yourself with with larger vehicles, then you could move with a momentum. So again, with the objective to diversify away from oil-based economy to a more service economy, to a more, sort of urban economy in terms of the red tapes on visas, on visiting, on stuff like that. We see several mega events happening. We see the World Cup in Qatar. We see Expo in UAE. We see, for example, now World Cup is coming to Morocco and Saudi Arabia. Those are all events that will contribute to the economy as general, and then ventures and startup ventures, if they're smart, they can also play a role over there. On the other side, generally as an industry, most of the people, they estimate AI to be hundreds of times bigger than the internet. And for somebody who has lived like a recognized time of my other life before the internet, we could see how excited we were when the internet came, and how it has contributed into everybody's life today. But again, nobody can estimate how AI could be, and then AI plus quantum. You see now this test which has been done by Google Below, the quantum stuff. They did the process in 5 minutes, which is equal to 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 10 power 27 years of computing based on supercomputers as of today. So if you look at this, you see that, for example, you'll be able to compute against most of the problems, whether it's health, whether it's logistics, supply chain, manufacturing, pharma. You'll be able to compute and create solution that used to take 50 years or 20 years to create in a couple of days. So the magnitude of the impact of the technology, it's big. It's going to change the whole landscape, and I think we are pretty much in the right place and the right location, having access to all these places.
I mean, honestly, it's great. Very charming for me. Maybe, I'm seriously considering to move to the UAE, honestly. I've been here like this spring. It was, weather was also okay too, honestly. Lifestyle is pretty good. I feel extremely luxury. The same price that I spent here in Tokyo, it was great.
This is
And I
another
thought, okay,
major point, by the way, and it's another major point. I mean, if you try in premium services, I mean, like mostly UAE, Saudi, Qatar, most of the Gulf countries, you can get a very high level premium service against what you pay for the normal service in many other places of the world. And this is also an opportunity to test many premium services over that. But what we see after COVID, people are not focusing only on premium services, because premium services, you will use them after you guarantee your shelter, you guarantee your rights of movement, you guarantee your food supply, you guarantee your health service, and all these factors has been disrupted during COVID. So people in order to enjoy these premium services and everything like easy and with a touch of a button, you need to work on a more non-attractive industries, to make sure that supply chain are taken care of, climate is taken care of, agriculture and everything is taken care of. So at least you'll be in a position to enjoy those added value, services.
Amazing. So, you know, considering that, as I mentioned, it's really interesting to move there. I'm actually, actively trying to reach out people and connect, and perhaps maybe, the startup that we support in this region, also perhaps we're going to be able to support there too. At least maybe introductory, market introductory, or building, point of contact partnerships there, so they can just get some point of contact in the region as a like just like touching the water, testing the water. So I would like to a little bit move forward in these, opportunities, but at the same time challenges to be able to back startups or support startups to bring their and so on sort of things. So can you a little bit mention like what would can go wrong if you could, for the especially international VCs, I mean startup backers overall, and then their portfolios to go there for the cross-border investment standpoint. What do you
Well,
think? Like,
I think the doors are open right now. Let's see, for example, Abu Dhabi through Hub 71, they have a scale up, they have a London landing program, which they can subsidize a lot of cost, based on your stage and based on your objective down the line. We see Dubai right now, through the AI and Web3 campus, that they are looking to attract, the top 500 AI and Web3 companies by 2033 to come here. We see Saudi Arabia, for example, with National Technology Development Program. They have a subsidy program in which, if you land and hire local, then they give you, a couple of $1 million to get through. So there's a potential upside, into diversifying the risk by moving to the region as a portfolio company. But again, on the other side, cultural understanding, it's very important. How to approach investors, how to deal with investors, whether you are a VC raising a fund or a startup raising, for capital. Again, we see in most of the exhibition around, people, they just come here, they want to spend, like 5 days and conclude a deal and stuff like that. You need to build relation. I mean, like, you need to build relation. This is a cultural atmosphere here. People want to know you first as a person. They want to trust you as a person. They want to go to the desert with you. They want to travel with you. They want to experience you as a person, and then after that, they give the money. So the relations here is more based on human interaction rather than looking at the numbers. And actually, in early stage startup, this is a very crucial point because, again, you did not have that much of traction or PNL or stuff like that, that you could say, okay, I've reached an institutional level, and my books are good. So you're looking mostly to show, your skills, your intellectual, like, asset, your emotional intelligence and stuff like that. And then we've been involved with a lot of programs, from, like, for example, Korean SME, some programs from, right now, BIM Ventures, they're involved with a program from Japan. We've been involved with a couple of other programs on just trying to address this cultural element when they are approaching the ecosystem here, which has been very successful because, again, many people who have gone into, for example, into Leap or Beban or whatever they see, there are a lot of side events which are making more connections and getting to meet people in a more personal manner after the main event rather than meeting them during the event.
yeah, yeah, sure. So let's say um we want to make a bet there. So we want to invest in a startup, let's say, what are the key elements of structuring a successful VC deal there? What are the differences? What should be careful?
Well, I see founders in early stage startups, founder is are key elements. Founder relation also is a very key element because what we see at the failures, we see mostly is because of founders.
Mm.
Founders they fight, founder they give up, founder they don't feel they don't have the right equity to keep pushing forward and stuff like that. And then when this is combined again with lack of education from the investors, then it becomes double trouble. So, for example, some of the investor they'll come and offer 50% equity against a specific amount at early stage. Now, for the founder, this might be a real good thing because okay, I don't have to worry about the money. I can go fast. I can go stuff like that. But again, on terms of VC and scaling structure, now this could kill the startup right away because the power among the board, the ability to take the decision, the ability for the founder himself to enforce his plan is being challenged big time because end of the day if you dilute your first investment for 50% after 3 or 4 levels, even if somebody agreed to come in and invest after that, you will remain with something that will not allow you to put any decision on the table. If you remain with 10% or 5% and you go onto every board meeting, I want to do that, and then you don't have the voting power in order to at least to defend your vision for the startup, then here this is a challenge. Again, also we look at a startup which are well structured legally and in terms of corporate structure from day one, because this tend to be expensive as a startup grow. Many of the startup they grow as an operating company in a specific country without a holding umbrella, and then after that you need to make a holding company, and then you need to put the IP, you need to move the investment to the holding company, and you need to do a lot of structuring simply to move to another country because you don't have an umbrella that can allow you to scale, to other countries. So these are some of the challenges I think we face with the startup with VCs coming to the region. As I said, it's a personal relation in terms of the raising fund. Also, in terms of deal flow, there is a challenge on deal flow, especially with VCs, early stage VCs, which has a lot of capital to deploy. Because end of the day, if you're deploying half a million per ticket, or you're deploying, for example, 250,000 per ticket at pre-seed, for example, then with 30 deals, you would deploy, about 1.5 million. Or you deploy, for example, a sort of 5 million. If your fund is like, 50 million or 100 million early stage fund, then here it doesn't add up. I mean, like, you will not have the deal flow to select, 5 out of 100 to deploy, for example, 70 or 100 deals. And even if you deploy 70 or 100 deals, would you get the time and the effort to support them move and scale and stuff like that? So it's not about the ticket size, it's not about, how big the fund is. It's about how to support each and every founder after you do the investment in order to sort of multiply the amount invested into them.
I see. I see. It's very interesting. So, um, that brings me to a question related about. By the way, I'm also merging with some questions from the audience, um, into this flow. So, especially the last point that you mentioned, um, what VCs bring to the table, that's the important part. So do we really support them in the maximum? Because in the Silicon Valley mindset, there is this spray and pray approach also sometimes works too. We provide a lot of checks and the founder is supposed to be extremely capable, right? And achieve. But we provide some support, obviously. It's not venture capital is not all about money, right? It's about the smart money at the same time. Um, but how is things works in the support mechanism and the added value VCs put on the table in the Middle East works?
I think network is one of the most important part. That's why you see in this Shark Tank and other deals where it's a bit of an extracted model, to extract the whole process into like 1 hour or so. But again, two investors are better than one investor. Three investors are better than two investors, but not too many investors that you cannot wrap around on the strategy to move forward. On the other side, networking, we follow a strategy where it's land and expand sort of stuff. So most of when you look at investors, you look at investor who can support you gain more traction, gain more customers, gain a lot of advice. Because again, as a founder up there, it's very lonely. Sometimes you need to take very serious decisions, which you have not taken decision before. So again, having an
Mhm.
investor or a mentor, or somebody you can reach out for advice, and you at least consult with them on this type of decision, they would have faced this sort of scenario sometime back. This is such a added value that you cannot quantify with money, because that decision could also bring up a lot of money, or risk, losing a lot of money as well. So again, both investment, I think the relation started when you invest. It does not end when you invest. We see a lot of founders around here, they did not get along with the investors, and we see investors who are not really good to the founders. So again, it's a relation which has its own pros and cons. If it's not really good, it's better to keep, you know, away of that engagement till you're comfortable. It's good enough for work. And most of the investors here, or the mentality of the investors in Middle East, still real estate investors mentality. It's an asset-based investor mentality. Everything is seen and felt. When it's come to technology, there's a lot of challenges, in terms of how to evaluate this venture, or how do we expect this to scale up in terms of marketing budget, in terms of cost of customer acquisition and stuff like that. So there might be a lot of unknown stuff, but again,
Mm.
just focus on investors who can add value beyond money, rather than considering investing is the final point of the engagement.
Yeah, for sure, sure. Especially in this, high culture environments, uh, and in multicultural and high culture environments, and high and deep culture environments, we really require some support, support and a friendly support from the VCs and investors. Both, from the founder's perspective, also from the investor perspective as well, and as a collaboration um, between the ecosystem. Um, we see this also in Japan a lot, and I see this one in Southeast Asia as well, because a lot of countries, a lot of things, a lot of cultural differences is extremely valuable and growing trend globally. Um, I mean, personally, I also build my VC thesis around this, how we can really provide a long-term support without exhaustion or resources realistically, kind of 3 months support a year, and then maybe a lifetime support, in partnership with the FI, maybe something like this. I'm learning a lot from you. I really appreciate it. This is a been a great session.
Thank you
All
very
right.
much. Really enjoyed, talking to you, Enric, and the other guys. Yeah.
Yeah. Appreciate it. Thank you so much for this support, and see you around.
Thank
And
you.
thank you. everyone on the chat, and we put the networking for the audience. Feel free to jump in the audience, and
Okay.
we go there. All right.
Yeah, we can move to the breakout rooms. So at least, we'll have, yeah, some sort of networking. Thank you very much, everybody.
Thank you so
See you
much.
there on the other side.
Yeah.